And then from here on is one of the beautiful trades. One of those trades that just go to your target beautifully. And just like that, straight down for 11R. What's going on, family? So today I'm bringing you a trade on GBP USD. You know what it is, another high risk, high RR trade. It's actually a trade that I went to take, and I actually made a major mistake. It was a day when I allowed my trading psychology to get the better of me. I'm going to break this down. I'm going to show you the mistake that I made and how I allowed my mental to get the better of me, meaning that I actually missed out on a beautiful trade. But I'm going to break it down for you anyway so that you still get the benefit of what I saw that day. So what we have here is GBP USD, and this is the 1 hour time frame. I'm doing showing from the 1 hour time frame just to give you guys context, because you can see here that we are bullish on the high time frame. All right. So if I was to even just show you how cover the build-ups and the inducement, you see down here on the left, you've got this this equal lows, and you've got a nice inducement, and price goes higher, and then you've got a few others lows that are induced on the way down as price moves higher aggressively. High price gives us a nice inducement to the high side with vector candles, and then the mitigation of the inducement here, and then you have the the order flow as well, and price starts the staircase back down again. At the same time, what price is doing here, you can see, is pretty much building a bearish channel, and as the bearish channel comes down, you can see here that we have this nice inducement here with the vector. All right, so this is, I would say, this is the most important inducement on that time frame, so you want to be trading away from that. So go down to the 50-minute though. If we're now looking, what do we see? So if I just delete this bearish channel for a second, I just want to take note of this nice beautiful inducement. You can see here vector candles, aggressive moves to the downside, and then mitigation of the inducement itself. Price moves away, and it builds up these highs here. You could say that it's almost looking like a slight bearish trend line. All right, this is the 50-minute chart. So if I put on my timing, you can see that it's now broken up into days. And if we look at this, what do we see here on the 15-minute? So what we can see first of all is, so we've got, it always makes sense to to look at the price and to build up your picture from the most relevant inducement. So here you've got the inducement low on the 15-minute, price trades away, and it's building up a trend line up here. So if we've got the inducement here, then we want to trade towards, away from the trend line, from the inducement and towards the build-up. All right, you want to take out that liquidity eventually. However, what I'm about to show you is I actually took a short trade on this day, and those of you that are more advanced will be able to see why straight away, and those of you that are not, follow me as I build the picture for you, and hopefully you start to understand. So we have the inducement to the low side here, and we've got price trading away aggressively here, giving us these vector candles, giving us this fair value gap or imbalance, right? Then we had the consecutive mitigations here, which actually giving us now a nice slight build up, all right? Similarly to a trend line. Then price trades away some more, and it comes up here, and it mitigates, not quite, and it mitigates this high, high time frame high it gets tapped into, right? Cool. So as that happens now, price then trades away. Someone may look at this and may think that price is then going to just catapult to the downside, take out the low from the previous day, and then keep going lower. But remember, we're bullish on a higher time frame, and we want to trade away from the most relevant inducement. Okay, and at this point, yes, price has come down, and price has taken out this low, inducing this low to then potentially move higher. All right, but we do have this inducement high that's yet to be mitigated. Okay, so if I leave that on there, you can see here we've had the inducement to the low side, and if we go down to the 5-minute now, this is where things get a bit more interesting. So what did I see on the day? All right, so if I'm honest with you guys, all of this rest of this stuff doesn't really matter to me. I can go on the 5-minute on this day, and I'm looking at, what am I looking at? The most relevant inducement. Then I'm looking at the build up. So I'm looking at this. I'm looking at this inducement. I'm looking at these highs, and I'm looking at these lows. All right. So let me go in a bit more detail for you though. So this build up down here, you can see consecutive mitigations, giving us nice liquidity to potentially target if you're looking for a sell. At this point, sells don't make sense to the average eye. They just don't make sense, right? But if we're looking at this on the 5 minute now, what do we see here? So we've got price come down at London open, 8:20, 8:10 a.m. So this is, my timing is a little bit off actually. At 8:10 a.m. All right, so this is London open, and price moves away. But what price actually does here is creates relatively equal highs. You've got highs here, all of these highs, look at that. So you've got multiple highs here to target. And you've also got multiple lows. You could say this is not quite a perfect trend line, but it's still liquidity. This low for me, there isn't enough there to say, yeah, this is it. I want to trade higher from here. All right, so at this point, I'm on the chart. It's 1 p.m. my time, New York open. I'm not interested in buying or selling at this point. I'm not interested in buying or selling, simply because there's liquidity on both sides of the market. The market could continue to just come lower, leaving these highs to then go higher. Or the market could go higher to then come lower. So now it's more of a waiting game to see what the market does. All right, so let's play on for a second. You can see here, so cool, so these highs are starting to be taken. Cool, let's go on to the 1 minute now. Right, so here we go. This gets interesting, all right? I'm gonna delete this for a second. So what have I pointed out to you guys? I pointed out the fact that we've got multiple highs up here, all right? And you can see here that these highs now have been taken out. We're now in London open. These highs have been taken out, all right? And then price has given us a nice rejection away, giving us our relative break of structure as well. All right. So I'm looking at this and I'm thinking, okay, price has come in. It's giving us efficiency on the high time frame here as well. All right. Maybe from here on, I can take this from here. Go to the 5 minute, take this from here, and I can target these lows here. Or even maybe these lows into this nice imbalance or fair value gap to then potentially take out the liquidity to then go higher to attack these highs, all right? So it's understanding the story, understanding the picture, all right? So that's what I saw at the time. Let's look at what happened though. Sorry, I didn't change my tool. Cool, let's look at what happened. Press play. Cool, so I'm in this trade now. I'm in this trade. I'm in. Initial slight reaction, and then boom, takes me out. Cool, so this is a loss. All right, this is a loss for me. So after this, if I'm honest with you, this day I was in a bit of a funk that day. After this, I was like, you know what? Maybe I'm just need to just give it, call it quits for the day, keep it moving, and that's that. And I jumped to the charts. I just thought, forget about it. Maybe I'm just wrong, and price is going to keep going higher. The thing is, I still had the rest of the New York session to go. A New York trap to come, New York session, the rest of the New York session to come that could give me a nice move still. But it was what it was, right? But what price actually was doing was going higher to take out this structural high as well. Okay, so let's see what happens. Cool, look at that now. So price does something similar. Let's go back for a second. Cool. Price does something similar. Yeah, if you look at these two price places of price action. Look at this, and then look at this. All right. There isn't much in it in regards to the difference. Because look, even here you've got your nice. You can call it a relevant breaker structure or some kind of breaker structure here, right? It's the same type of price action. In a way, it isn't much different, right? Only thing you could say is maybe this is a wick mitigation here. This is a wick, and this was more of a. If you was take the entry based off of this, there's not really a wick here. It's more just going straight into a body. And the timing arguably may be better here as well. But if you look at the price action here, it's not much different. But what is important here is the structural point being taken out. That's important. Because although, yes, it took out this, structured these highs and it took out these highs, price wanted to also take out this. Okay? So this was the structural point that it took out. And then as price did that, what would be a great entry now would be just a mitigation of the inducement. And you could target, let me make sure. So then you could target these lows for sure. That's what happens. Tags in beautifully. Plays around for a little while. And then from here on is one of the beautiful trades. One of those trades that just go to your target beautifully. And just like that, straight down for 11R. If you want more, you want to go deeper, then check out the links in the bio. I'll catch you there. All right, God bless, take care, and I'll speak to you soon.